Crypto DLT with MrConectr. Be sure to subscribe. Hit the notification bell for daily content. Let's go.
Speed of cross-border payments and the opaqueness of that process, and I guess it's also error-prone to some extent with SWIFT. Santander seems to be trying to approach it with a partnership with a Ripple. I'm just curious what your thoughts are on that.
So I do think that of the use cases out there, cross-border is one of the most compelling. We know that intermediation chains cross-border are long and quite opaque, and they're slow, and they can be quite costly. So my sense is that technology with appropriate safeguards could make a material impact and likely will, and it may well be through a partnership model. I don't want to pronounce on any particular approach, but there are a variety of partnerships out there that are trying to innovate and to reduce friction.
Speed of
SWIFT is the preeminent messaging system for the financial industry, which covers, say, payments, FX, trade, in terms of securities, etc., NOSTA reconciliations, etc. What we're looking with crypto, though, is where SWIFT would have a store and forward system for most of its payment transactions, where you need service level agreements that in a certain time I will do something, the payment turns up at a certain time during the day. Here we're looking at the new network styles which allow instant, real-time movement of the funds and visibility of those funds as well. So we would not have a situation where banks need to come back to you and say, have my funds arrived, it's 3 days later, I need to find out or find query messages moving around the network. There's nothing like that. I don't believe Ripple is going to replace SWIFT. Ripple is one of the complementary networks which is going to allow those institutions who need real time to make use of that. And I think we're also seeing that SWIFT are changing their network capability so that real time will be a possibility as well. But we may also see Ripple XRP moving across the SWIFT network.
XRP is like a Bitcoin. It's a digital asset. It's today the third most valuable digital asset. And what we do is we take a transaction between banks, and instead of having a bank pre-fund an account at the other bank, which is how correspondent banking works today, the Bank of Brad in dollars would pre-fund to the Bank of Julia, perhaps in pounds, and then I would debit and credit that. But that means I have to pre-fund and have dormant capital sitting at that other bank. What we allow banks to do, allow payment providers to do, is to tap into the liquidity of XRP liquidity. So today there's lots of liquidity between XRP and US dollar. There's lots of liquidity between XRP and British pound. And you could tap into that to move value in real time, in seconds. And even compared to Bitcoin, which takes up to 12 minutes to complete one transaction, XRP is extremely fast at about 3 seconds per transaction. That has meant XRP is extremely scalable in contrast to how Bitcoin works.
SWIFT now having its own blockchain for fast settlement, is the bridge asset pitch still valid, or should they get gold shifted and stuff?
No, I think that XRP is the bridge between traditional finance and blockchain, decentralized finance. Listen, I'm not scared of SWIFT. SWIFT hasn't really changed since the 1960s. I don't think they're going to wake up one day and say, hey, let's revolutionize, payments. I don't think that's how they're built. I don't think that's what their culture is about. But I think that you're going to see new companies come and use this technology. I think you're going to see banks bypass old legacy technologies and move directly to blockchain. You're already seeing the likes of BlackRock, Fidelity, come into this space. And the great thing about blockchain technology is you need fewer intermediaries, not
Yeah, it's MrConectr. How's everybody doing? I finally got everything going for the stream today. Hope you guys are doing good out there. Yeah, we're getting closer every day. Swift is implementing its own blockchain, guys. Let's check up on this and see what is going on with this. Let me see. I've asked Grok about this Swift blockchain. First, we'll get into the chat. What's up, Bradley B? Good to see you, sir, as always. Angus Scrim in the house. Smash those likes, says Angus. Bradley B. Just FYI, Uphold has finally completed this TX transition. So it's time to start seeing price discovery next month. Yeah, this thing's taking a hit on us big time, but Texture Capital is on it, it sounds like. And I've actually got... Oh, wow. Did I get rid of that? Man, I had a Texture Capital. Maybe it's straight from them. Let's look at Texture Capital. Actually, was it tokenization? Yeah, I was looking at this media here, and Texture had dropped a. Is this? Let's see, TX. I knew it was at the top, but there was a longer one. Where is that TX video? I'm jumping all around here. Toolbox. Here we go. I guess it's... No, this isn't it, but let's see. Big Go and TX. I guess they're being listed on Big Go right now as well. Yeah, Uphold did the transaction. Sorry about the slow start to the show today, guys. I'm working all around. I did want to see that TX video. Man, it was a longer video I had. When you go live, you can't find anything. Anyway, yeah, TX is live for the conversion. Solo and your Corium have been converted over to TX. Kind of funny that, it's all about tokenization. TX and the Texas Stock Exchange is coming. So I don't know if that has any correlation or not, TX and Texas. So that'd be interesting, though, to keep an eye on that. Angus Scrim says, mine got swapped out but can't trade and move yet as of last night. Okay. I guess they'll get it all figured out. Bad thing not being able to move it off yet. Can't delegate. Oh, yeah. Yeah, I guess mine's still locked up as Corium on the mainnet for the Cosmos chain for Corium. So, yeah, I guess that's... still staking. I don't even know yet. I've had it staking. It was like 43% staking, but damn, the price has gone down so far. It's not like that really matters, but maybe it's just because of this. It's like a big scare off, I guess, especially when the team was texting out that, they were wanting our opinion on which way the projects should go. So it's like, yeah, what is going on over there? Makes sense though to combine the two tokens to me. I mean, they've been talking about that for over a year now, actually. What's up, Silver Days? Good to see you in the house. Let me get this going. Right on. Good Monday to everyone. It is the 30th, March 30th. Wow, we're almost in April. So what's coming in April, guys? We've got lots of Swift changes, lots of OCC changes coming in April. Hopefully the Clarity Act will be signed, or I think they said it's just going to be brought to the floor before the end of April. I've got all kinds of news today. We've got Ripple cracks the privacy code. So you've got hidden, we'll see what's hidden for these new multi-purpose tokens, what should be available there as far as confidential transfers. So we'll get to all that in just a minute. Let's go through the connector coins on the past 24 hours. Midnight's up the most, 13.69. So lots of privacy talk between the XRP Ledger and Midnight here. Sentinel, there's my P2P play. Sentinel VPN up again today, 11%. Canton's up 8%. Velo, Axelar, Algorand, all in the green today, barely in the green, some of them. And the connector coins that are taking a hit: Persistence, Veritasium, Reserve Right, Zahao, Loan Protocol. I saw something earlier. Somebody was talking about my Loan Protocol. I've been doing pretty good on that. And the market cap is not counting the circulating supply. Like, they're not counting the locked up loan tokens. You can long stake the loan tokens, but they're not counting that as the circulating supply. And we do know that circulating, that total supply is increasing. So yeah, I've always kind of worried about the ones that are the inflation of the supply could go up. But over the years, I've finally thought that, looking at the dollar and looking at what the dollar's done, it really doesn't matter. I mean, of course it matters when you first look at the coin, but when you get into adoption of technology, I don't think the supply even matters as much as it used to with some of these tokens. But that's the reason I started getting into loan, and I was like, they're increasing the supply of the dollar like crazy. So I mean, it just depends on what kind of tech and what kind of partnerships are going behind this stuff. But let's keep going. Top made in America cryptos past 24 hours. Arc Block ABT is the fastest running crypto made in America. Arc Block ranked 645. We'll just take a quick look at a random crypto. I've never even heard of this Arc Block. We kind of do a lot of research on the channel together. Just kind of a lot of the, I try to cover the news and throw my little spin on it in between the news, and we'll do research at the same time on the channel. So yeah, that's what I was saying, Angus. Makes you wonder if the TX token and the TX stock exchange have anything in common. That's a big coincidence right there, right? There's no telling. Maybe I should just hold on to it and see what it does. It's already taken so much of a hit, but we'll see what happens. We're hanging in there for utility. Once utility hits, there's no telling what this stuff will do. Yeah. Appreciate you catching me live, Angus, in the house. Cool. Arc Block. What is Arc Block? First, let's see how many tokens are. Because, I will look at the supply, of course, to judge the price. But that's not going to be end all. I'm not going to say, I'm not even going to, look at this token because the supply increases. But you got to look at who's doing that. What, are you going to trust the Ethereum Foundation increasing the supply? Or are you going to trust, a company like, I've researched a lot about Metallicus doing that. Metallicus has a couple lawsuits that have gone against them. There's been a lot of FUD thrown on them over the past year especially. But from everything I've seen as far as these lawsuits, I have no clue. I'm just kind of guessing here, but I did research that one guy, the biggest lawsuit. This was a guy that left one of the biggest firms. I think it was a private credit firm, and I can't remember the name off the top of my head, but I did look it up, and it was like one of the largest private credit firms in the country, and he got. And I would think, I'm looking at it like he got deployed to Metallicus, right? He got deployed to go there and check it out. And, this is possible. I'm not saying it's what happened. I'm saying it's possible he gets deployed from a legacy system over to this blockchain system and to get as much information as he can, right? And so the whole time he's there, he might be looking for a lawsuit in order to gain discovery. So that's the name of the game for a lot of these players. They'll deploy people to these companies and tell them to, look for something that you can take out a lawsuit against the company on. I'm just guessing here. This is all speculation. I don't know anything about any inside stuff, but I can guess that they'll send them out and check out the inside operations of the company, and then try to get discovery in a lawsuit. So all they really wanted was discovery to start with, as much data. So that goes to show you how much data is going around, how important data is. Angus, if you get a chance, take a look at the Texture Capital website. Go solutions, then blockchains. Let's do that right now, Angus. Let's look up. Is it TX? Are we looking on X, or let's see? Let's go to the regular website. Yeah. Do a little hunting with you guys. Texture Capital, and you're saying go to solutions and then blockchain. So here's Texture Capital. This is who's behind the whole merger from Sologenic and Corium. They're a big brokerage. And let's see, solutions and then capital or blockchains. Yeah. Texture Capital or Texture partners with multiple leading blockchains to power our tokenization and broker-dealer services, embedding trust, transparency, and efficiency directly on chain. Yeah, a lot of these private markets use these broker-dealer services as well, guys. So I've been talking about on the channel how private markets are probably going to be more appealing than a company losing their control, their sovereignty of their shares over to the DTCC. Let's see, embedded trust, transparency, and direct efficiency directly on chain. That's a big deal there. A blockchain serves as a secure ledger of asset ownership and transaction history, an ideal foundation for next generation financial applications to feature the full potential of tokenization. Texture integrates its services natively into blockchain networks and in select cases operates validator nodes to help secure the ecosystem and validate transactions, strengthening the connection between regulated finance and decentralized technology. Texture Capital is FINRA. Okay. Yeah, FINRA. They've already got their FINRA approval. That's directly from the Treasury there. Selected integrations. The Canton Foundation. There you go. I really should look more into the Canton. I hear a lot of people talking good things, a lot of big companies checking it out. But that Paul Barron interview, that I just did not like the way that guy came across. It just did not seem like how first impressions are, guys. Nothing against the guy, just didn't have a great first impression of the Canton guy. I don't even remember his name, but you can look that up on Paul Barron's channel, or Rule Black had a good a good video about that. So Canton is a public network, permissionless blockchain. See, he didn't even want to be considered a enterprise, a institutional blockchain. He was like, well, why do you call us institutional? And Paul Barron was kind of caught off guard, was like, why wouldn't you want to be institutional? And he was like, is it because we don't have any meme coins? You think we're institutional? But it was like very back and forth. It was like it wasn't even a big deal. And he was arguing about it. So yeah, weird. Canton Network is public, permissionless blockchain, purpose built for institutional finance, combining privacy, compliance, and scalability. Texture is a validator on Canton. Okay. You got all the big players, coming into this Canton, and Canton's gonna mirror the private DTCC back-end private ledger. They mirror the assets over to Canton, and then they read Canton and update their back-end ledger. So it's like a crossway mirror that they're going to be using. And that's just the first one. They said they're going to be using multiple blockchains for this stuff now. And this is only for public markets. So crazy that they want to issue public markets onto back-end private chains, and private markets are being issued on public chains. So it's like a backwards conundrum there. He did come across snippy, yeah. Personally, I'm staying away from Canton, Bradley B. Okay. And boom, Canton and Corium now TX. Selected integrations. Canton public permissionless blockchain, purpose built for institutional finance. See, they're even saying institutional. That guy was saying we're not institutional. And even Texture Capital was saying they're institutional. Combining privacy. I mean, he was really stretching, trying to tout. It was like he was trying to justify their decentralization, actually. I don't know. I don't know if it's about the nodes, if the nodes are centralized. I think we're asking the right questions, though, on the right track. Combining privacy, compliance, and scalability. Texture is a validator on Canton and our offering platform, ATS, and Transfer Agent are featured apps on the network. Texture has a Transfer Agent and ATS app on the Canton network, which was an asterisk full integration of ATS and Transfer Agent expected in Q2 of this year. The full integration of Texture's ATS and Transfer Agent expected onto Canton, but they're also using Corium to simplify tokenizing these real-world assets. I love the Corium smart tokens because the technology is embedded into the token instead of the DEX. So that's pretty interesting. And they're geofence tokens. You can geofence your tokens where they can't, and it's like physically, they can't move or be sent out of the country. Pretty wild. They use, I think they use radio waves for that. You know, if you've got a tower that's sending out a radio wave from America, I guess it degrades over time, and they can judge the signal, how far it's going, and they can jump and use those signals for the radio waves to put limits on where tokens can be transferred. It's pretty wild. But Corium simplifies tokenizing real-world assets by allowing institutions to program business and compliance logic from the moment an asset is issued on the blockchain. Corium is the blockchain supporting solo text and the default blockchain for all real-world asset tokenization at Texture. The default blockchain. So now they're going to be calling it TX. Interesting. I appreciate that, Angus. I had no clue they were using the Canton network as well. So what is a ATS as far as financial? What a transfer agent is, but what's an ATS? ATS services dedicated to helping clients navigate the financial landscape by providing tools and resources to evaluate their current position and progress. So it's, they're using that to analyze the data, basically. It's all about the data, guys. Data is so important. Appreciate that. Angus, you the man. Bradley B says he never put a penny in Cardano in the early days because of Charles's attitude. He made $500 million on paper on midnight. Another money grab. Yeah. Texture is going to grow with proper legal rails, just like Flare. Both hit from the start. Yeah, they both got their start from Ripple. Yep, exactly. TX is going to tokenize the new stock exchanges to get started. Yeah, that'd be awesome if they could take over that and get that new Texas stock exchange going using that TX token. Wow, that might be something else right there. Okay, where were we at? We were looking at what was it? Arc block. Let's just see what it is before we move on, because it is running as an American crypto today. And that's why we like that. American Cryptos, it's a Web3 development platform that natively integrates decentralized identity, AI agents. Everybody's getting on the AI agent train. And the modular cross-chain architecture. So all of them, guys, all of these tokens are getting on AI agents, cross-chain architecture, decentralized identity. It offers a framework for building scalable dApps. You know, a lot of things a lot of others are working on. but I say the more the merrier, you know. The more projects we have in this space trying to build out, the better it's going to be, right? That's what true open markets is. Let the market decide. No, you're good, Angus. I didn't have much planned. I kind of just go through my little spiel here, a couple things, then we'll get to the news in just a second. You didn't interrupt at all. I like to roll with the community, you know, whatever the community wants to discuss on the connector stream. We've got privacy tokens. Of course, Midnight's up again, and our peer-to-peer NYM and Ycash. How about today's calendar? Let's refresh for Monday, March 30th today. Make sure we don't miss anything on the calendar. Try to stay up to date on any of these projects. Cubic mining on Dogecoin. Wasn't it Cubic that took over? What was it? A privacy. Was it Monero? Wasn't it Cubic that did the attack on Monero? They were taking over the mining, and they had a 51% attack or whatever. I don't know if they're, and you know, they can only keep that up for so long, though, a 51% attack. And if you're new to the space, and not all the coins can do that. It's just proof of work coins, right? So not all the coins have that vulnerability of a 51% attack. What else do we have? Privacy roundtable for Dash. I used to have some Dash back in the day. Okay, cool. Let's keep going. We got 2.28 trillion on the total crypto market cap. Having a little pullback there, but it looks like, to me, you know, I don't follow charts at all, but that looks like a steady incline still. Even though we've had that pullback, it just looks like a steady incline. I mean, this is a new market. Give it a chance to go. Give it a chance for after clarity. Let's see what happens after clarity. Market cap dominance, Bitcoin 58%. So we want to see that go down so these utility coins can run. We're going to take a quick look at gold on the year. It's up 47% on the year at 4,518. Silver's up 104% on the year at $70 today. Only 40 million locked up in our loan protocol. I just like to take a quick look at the percentages, see if anything pops out. You're going to see a lot more of this coming. You're going to see the XRP Ledger's loan protocol coming out soon. I mean, that's everything. Being able to lock up in a single pool and get paid for not even, you know, they've got the AMM, but, you know, you've got to sell half of your asset. You got to get into a secondary token to make those markets. So let's take a quick look at coin market cap. Binance AI Pro Open Beta is going live. Binance Beta launches AI Pro for agentic trading. This is coming, guys. And they're going to have the personal agents. You know, that's where it's going to be. If you ask me, you're going to have just a personal agent, and you might not even, I mean, depends on kind of what kind of person you are. You might not want to deal with all these different apps and all these different logins, and you get your agent to do everything for you. You know, you might need one app. It's wild. Midnight Network goes live with privacy first blockchain. I think I've got a bookmark on that in just a minute. That's yeah, they've already had the airdrop. I did participate in that. And today's the actual network going live. I guess the tokens are running on Cardano up until today when now it has its own network. So I'm not sure if you need to bridge those tokens over somehow. I'll have to take a look at that. Web3 rails enable women creators to reclaim ownership. That's what's key about everybody, though, is ownership. Reclaiming ownership. I love that people are creating artwork, NFTs, and actually when they sell them and resell them, the original creator is getting a percentage of the resale. That's like a dividend off of your project. And as far as the agents, we saw where Metallicus, you can put up a request. You can go into the agent portal and put in a request for a job, you know, for an agent to complete. So you might want an NFT on a certain NFT and this with a description, and you put in the description and the agent contacts you within seconds saying, hey, I can do that job for you. And then you review his offer or the agent's offer, and you approve them to get started, and the agent creates the NFT for you and sends you a preview, and you accept it, and the agents and then the money's transferred from out of the smart contract. So there's your agents working for us, doing jobs for us. But whoever created that agent got the money on the back end. So there's all kinds of routes. Do need to check into a lot more agent possibilities as far as like virtuals and all. That's the big agent chain right now, I think. Yeah. Okay, here's a new article. This is ECB move to accept tokenized securities reignites XRP collateral debate. 2 hours ago. The European Central Bank accepts DLT issued tokenized securities as collateral for Eurosystem credit operations, effective today. That's right, that's what came out today. DLT tokenized securities as collateral. Axology, one of the first eligible platforms, is built on the XRP Ledger open source code, but the ECB says it does not mean it uses public XRP. Isn't it wild how none of these entities are willing to come out and say anything about actually using these tokens? And it's like the whole time we've been in on this stuff, it seems like it's been a hush hush, you know. Oh yeah, watch Tile BitSensor AI agents with their subnets. I did read up on that a little bit. Yeah, that there's a lot of activity on Tile. Yeah, BitSensor for agents. Make a note of that because I did look into that before. That seems like that was going to be the two blockchains I'll look in on agents, Tau and virtuals. Kind of behind the game on that, but you know, it's up till now it's just basically been like DeFi and for agents and you know, like lending out your CPU. I'm sure many more other use cases are going to come from that though. But the European Central Bank has started accepting tokenized securities for collateral. So I guess they're you can use that for a lot of things, not just loans. You can probably use it to get in a market, futures markets or whatever the bank's offering. Let's see here. For Eurosystem credit operations, and what many European markets see as a watershed moment for on-chain finance. The change effective today follows months of preparation under the Digital Finance's wholesale DLT explanation agenda, which gives banks a way to post properly structured tokenized assets against bank liquidity. It gives banks a way to post properly structured tokenized assets against central bank liquidity. That's a market right there. Or markets in general. The decision has quickly become the most discussed topic on Crypto X as part of the early platforms and focus. Axology is built using open source ledger code. I'm not sure this is like a Axology ad here or what. Let's see. I don't even know if they have their own token. I don't know. I don't think so. It's giving arguments that clarifies around its collateral network framework. It stressed that using XRP ledger-based infrastructure does not imply the use of the XRP public XRP token. The European Central Bank has stressed that just because they're using the XRP ledger, it does not mean they're using the public XRP token. Now, how are they using the ledger without the token, guys? Well, up until now, they're probably using private ledger, side chains. That's the only way you can use it without the token now. But you can't get liquidity in and out of it, of the sidechain, without the sidechain amendment that the XRP ledger has up for voting now. It's been up for voting for over a year now. So, but they sure won't say that they're going to use the token. Does not imply the use of. They make sure to say that, don't they? And that all eligible collateral must meet existing eligibility and risk control criteria, regardless of the technology used. That has not stopped XRP aligned accounts from trying to spin the development. Oh, we're just trying to spin it. As proof that XRP is now ECB collateral. While critics point out that this central bank is explicitly separating the underlying open source code base from the freely traded XRP asset tracked on the XRP price page. Come on, guys, look through it. Look through the graphs. It's right here in your face. Who reads this and says that we are just spinning it, right? We're just hopium. We're just trying to spin it. XRP aligned accounts, just spinning in this. Hey, what's up, Lizard King? Good to see you, brother. XRP narrative versus reality. All right, let's get our reality check here, guys. Because there's no need for the token XRP to do all this stuff, right? You don't need it to open up a wallet. You don't need it to pay gas fees. You don't need it to get open up a issued asset, right? It's wild. The association between the ledger and a major central bank is fuel for a long-running narrative that the token could one day sit at the heart of cross-border settlement. XRP maximalists on the X have seized on Xology's architecture to claim that the ECB now backs XRP, even as the official documents underline the collateral eligibility is tied to the legal issuer and the risk profile of the tokenized security, not to XRP itself. From a market structure perspective, analysts warn that conflating open source code usage with token adoption risks misleading investors about what central banks are actually doing. So it's not the banks misleading. It's not the legacy system misleading. It's these hopium XRP accounts that are misleading everybody, right? Wow. Bradley says XRP, Flare, XPR, Zebek, and TX, my big five. That's a good bag, Bradley. All with excellent use cases. Future going to be fire with these projects. I agree completely with that. I started trying to stack a little bit of Zebek here and there. I haven't been able to go in on it heavy. But I've been using the Uphold XRP card, and once a month you'll get rewards for using that. And I put the rewards into Zebek on Uphold. But I was watching what was it? How it, this payroll route they're going with Zebek is that's the start of money. It's kind of, I think it's bigger than what I had imagined, because payroll is where the money starts for everybody. So if you can get them right there at the payroll level, and if you can get the employees, which are, the consumers of the customers, the spenders of the token or whatever, and all the use cases and whatever the employees want to do with it after they get paid, that's a perfect route. That's a really good route to have a lot of exposure if you can get them at the payroll level before they even send it to other places, before they even spend it. So we'll see what happens with Zebek. But yeah, don't get all your hopium from this. They make sure to play it down, don't they? From a market structure perspective, analysts warn that conflating open source code usage with token adoption risks misleading investors about what central banks are actually doing. In another crypto news story on the central bank digital currency plots, legal experts stress that wholesale DLT experiments are designed to remain walled off from public tokens, such as Bitcoin. Walled off. Like it has nothing to do with the public token, even when they borrow code or concepts. As the ECB's framework beds in, the more sustainable question is how quickly volumes in tokenized collateral grow, and whether other central banks follow, rather than how far social media narratives can stretch the XRP connection. So we're just stretching it, guys. Social media is just stretching the connections. Wow. That was a good, fun article to read. Oh, Bradley B with the bomb. Thank you, sir. Appreciate that. Have to get back to the job. Have a great week, Mr. C. And remember that Jesus is the reason for all the seasons. Yes, sir. I like that, Bradley. Talk to you soon, brother. Thank you, Bradley, for the $50 bomb. You the man. Appreciate that. Let's keep it going. Let's take a quick look at... Let's go to our bookmarks, because there's a lot about the Swift stuff going on. Before we get to that, Franklin Templeton has a new product coming out, Easy Peasy. The future of crypto, simplified and streamlined. Exposure to top digital assets without the hassle of investing directly in tokens. So exposure to top digital assets without directly investing. Of course, I wanted to show you this. They put XRP last, beneath Stellar, beneath Solana, beneath Dogecoin, and beneath Cardano. That's wild how they do that. We've got Chart Nerd here for let's get into this Swift stuff. Chart Nerd, big XRP Ripple has partnered or has trialed its systems with more than 30 of Swift's banking collaborators that have just began live transactions using tokenized deposits after passing through the first phase of development. A unified token layer, a unified layer is building. Swift, what comes next? In near term, participating banks in the MVP will begin live transactions using tokenized deposits. And don't forget, when they tokenize these stablecoins, they're going to be allowed to fractionally reserve these stablecoins as well. This allows real-time payments 24/7 across synchronized view of obligations and transaction progress. The focus remains delivering practical utility. Now we're preparing to enable future forms of digital money as they become available. So these are all the ones working on that. All the banks going digital. 50 leading banks collaborating with Swift to define functionality and future phases of development. And of course, Smokedoll says Ripple's future is integrating into Swift. Within Swift, you already have the governance, the framework, the regulatory framework, and the reach in the system. If you can make that infrastructure network more efficient using XRP, using DLT, that probably is an easier way to move forward than to build a completely separate network outside of the existing model. For Ripple, the future is for them to be integrated into some network, like for instance with Swift. But as we saw, Ashish Burla, he's not really worried about Swift. Let's listen to Ashish again.
Swift now having its own blockchain for fast settlement, is the bridge asset pitch still valid, or should they get goals shifted and stuff?
So she just asked, is the bridge asset, strategy still still going?
I think that XRP is the bridge between traditional finance and blockchain, decentralized finance. Like, listen, like I'm not scared of Swift. Swift hasn't really changed since the.
And you know, something about this clip looks like AI to me, the way he's talking. I don't know what's real anymore. So tell me what you guys think.
Decentralized finance. Like, listen, like I'm not scared of Swift. Swift hasn't really changed since the 1960s. I don't think they're going to wake up one day and say like, hey, let's revolutionize, payments. I don't think that's how they're built. I don't think that's what their culture is about. But I think that you're going to see new companies come and use this technology. I think you're going to see banks bypass old legacy technologies and move directly to blockchain.
So to me, this is, it bypasses Swift. So to me, I've always kind of thought like Swift is going to be trying to stay relevant with this new system, and that it won't be integrated. It would basically outdo Swift. You know,
you're already seeing the likes of BlackRock, Fidelity, come into this space. And the great thing about blockchain technology is you need fewer intermediaries.
Yeah, fewer intermediaries. That's right. And Swift is a huge intermediary. I mean, the whole point of blockchain is to get rid of Swift, right? That's what I've always thought. So you've got some people saying that they're working with, some people saying they're replacing it. We shall see. Let's check out Crypto Panic right quick. What's up, Turple Nurple? In the house. Crypto Neum launches dual network stablecoin card platform for Visa and MasterCard global payments infrastructure provider Neum Global has launched a stablecoin card issuance platform.
It's almost immutable.
Hey, what can you tell me about a stablecoin card platform?
A stablecoin card platform is essentially a service that allows businesses and users to spend digital currencies, like stablecoins, at merchant locations around the world. These platforms convert the stablecoin balances into traditional fiat currency at the point of sale, so there's no need to build dedicated infrastructure. This means businesses can easily use stablecoins as a payment method through standard payment networks like Visa or Master. Essentially, it allows the digital currency to be spent just like traditional money, making it convenient for users and businesses to transact globally.
It sounds like my AI there was running out of breath. Wow. Yeah. Have you guys noticed that they're trying to be more human-like? That might be part of that. I don't know. But yeah, why do they need to even convert these stable coins? Right? That's a big deal. You've got all these different stable coins, and what's the conversion? UBYX was that company I was telling you about that does the stablecoin conversions that banks use. They have a pre-funded account with UBYX to send their foreign stablecoins to this UBYX, and the UBYX uses blockchain to route them and send them back the stablecoin that they want. So why can't point of sale, why do they have to convert it into fiat right away every time? Why can't it just stay a stablecoin or go to the stablecoin of choice? Angus Graham with the bomb, $20 bomb. Good to see you, sir. Appreciate that. Cheers. Yes, sir. Thank you. I appreciate the love in the house today for sure. Okay, let's keep going. Breaking Pumpius here 39 minutes ago. Oh yeah, we've got first ever zero knowledge privacy transaction just went live on the XRP Ledger testnet. Now, some of these accounts are touting this DNA protocol, which I have no clue about. This issued asset on the ledger, the DNA asset. A lot of people talking about it though, but I don't know, just because a lot of people are talking about it, they might be part of the project. Who knows? I have no clue. But DNA has pulled it off and turned into a ZK proof. This is an issued asset they're basically talking about. Let's see what the actual info is about the actual update on the ledger. Chad Steingraber has it here. The ledger multi MVP. Okay, this is not the privacy. The ledger MVP is being built open source on open source foundations, using a virtual Ethereum virtual machine compatible architecture based on Hyperledger. So this is part of the Swift deal. I thought I had some more on this. Moving to implementation. So what is Swift using? They're using their own blockchain. So what are they actually using? It looks like, basically, to me, it looks like all the chains with smart contracts. So it's being built on Ethereum virtual machine, on Hyperledger Besu, BESU. Now that is a private Ethereum ledger. That private Ethereum ledger does have connectivity to Ethereum mainnet, and therefore it is compatible with basically everything EVM, right? All the public chains that are touching EVM as well, including the XRP Ledger sidechain, EVM sidechain, right? It is designed to integrate with the broader digital asset ecosystem, forming a new layer within Swift's infrastructure stack that combines the capabilities of DLT with Swift's global reach. So all they've got is the connections, right? All they've got is the accounts, right? They've got the customer accounts. That's Swift. That's it. They just know all the people. So that's part of RippleNet taking over that one bank at a time, hopefully. It lays the foundation for interoperability and scalability. So to me, we've got competition here between RippleNet and Swift. That's what I'm seeing. I might be wrong about that, but it just seems like they are not going to adopt the best. It seems like the best is going to take over them, is my take on that. All right. What about these multi-purpose tokens, MPTs, and confidentiality? Bank XRP says it's big upgrade for privacy on the XRP ledger. Ripple researchers introduce confidential multi-purpose tokens. Now, a multi-purpose token that passed about a year ago on the ledger. That is a secondary token like the issued assets, just like the normal tokens. It's a new type. It streamlines the token process. Instead of holding two balances, it holds it together as one, and it's more metadata that it can use. So now we've got confidential MPTs, confidential balances. So this is not the native XRP. This is an MPT token on the ledger, can be confidential, and hidden transfer amounts for these MPT tokens. So this is not the public facing native token XRP. This is a MPT token that runs on XRP ledger. And of course, we've seen where the ECU is saying that it's they're using the ledger, but not using not saying anything about using the actual token. But we know that they talk their game all the time. They talk their book all the time. Why would they let us know about how the how their back-end infrastructure is going to work? Right? Confidential transfers for multi-purpose tokens. We introduced confidential transfers on the ledger. Is an extension of the XLS 33 token standard that enables confidential balances and hidden transfer amounts while preserving public supply verifiability. The protocol replaces plain text per account balances with EIGAML ciphertext and employs non-interactive zero-knowledge proofs to enforce transfer correctness, balance sufficiency, and invariant outstanding amount. Wow. Provides cryptographic auditability through an on-chain selective disclosure model. Experimental evaluation demonstrates that confidential transfers can be verified within XRPL validator performance constraints with proof sizes and verification costs suitable for production deployment. Lots of high-tech words there. I know what the ZK knowledge is. They're using that. That is where someone who or intermediary that or the chain doesn't know who's transacting, but they can approve it without knowing who it is, basically. So good that that's on there. And Ripplexity. Just in, XRPO cracks the privacy code. Institutions can now move tokenized assets on the XRP ledger. I don't think it's the regular tokens. It's the MPT token, and I haven't even gotten any MPT tokens that I know of yet. So I don't know. Maybe the RLUSD is a MPT token. I don't know which ones are MPT tokens. That'd be something to find out. Which tokens, which are MPTs. So what's come out that's an MPT token, right? Oh yeah, I had this whole thing about Swift. So we're covering Swift and privacy on the ledger at the same time, back and forth, guys. But let's finish this privacy.
Confidential transfers for multi-purpose tokens on the XRP ledger. Here's what it means in simple terms. Right now, when you send a tokenized asset on any blockchain, everyone can see the amount. Banks and institutions don't want that. They need privacy for their transactions. Ripple's solution? Hide the amounts. Keep everything else transparent. When an institution sends tokenized assets on XRPL, the transaction amount is now encrypted.
Nice. Think your buildle funds. You know, someone doesn't want everybody to see their buildle tokens, how many they have, right? Especially if their wallet is KYC, you know.
Nobody can see how much was transferred, but the sender and receiver identities remain visible, and the total supply stays publicly verifiable. How? Zero knowledge proofs.
So they can see someone sent it, but they don't know how much they sent.
The system mathematically,
unless they're on the other side of it,
proves every transfer is valid without ever revealing the actual numbers. And here's what makes this institutional grade. Regulators can still audit. Issuers can still freeze or claw back tokens when legally required. Compliance is fully preserved. This isn't a concept. It's been built, tested within XRPL validator performance limits, and is open source, production ready. Banks wanted blockchain speed. They got it. They wanted low fees. They got it. They wanted privacy without losing compliance. Now they have that too. The XRP ledger just removed the last barrier between institutions and on-chain finance.
Man, that was bullish. They got it. They're getting everything they want on the ledger. All the things that the legacy systems want, they are getting it. And this was the last piece, this confidentiality. Wow. Crazy. That was bullish, guys. I wanted to go back to Swift right quick. We're talking about, you know, are they going to go against and compete against RippleNet? Or is RippleNet taking over, you know, Swift? Let's see what Grok says about Swift's new blockchain-based shared ledger. Should I increase this for you? Yeah, let's read through this. It's a core technology infrastructure stack. This represents a major evolution from its traditional role as a secure financial messaging network to one that also supports direct on-chain settlement capabilities for tokenized value. The initiative aims to enable instant, always-on, 24/7 cross-border transactions at global scale, particularly for real-time payments and the movement of regulated tokenized assets such as stablecoins, tokenized deposits, securities, and other digital value. It builds on Swift's existing strength and resiliency, security and scalability, compliance, and reach across more than 1,100 institutions over 200 countries. Okay, here's the key infrastructure components that I was asking about. A shared digital ledger. It's a permissioned blockchain. That means it's private. They've got back-end controls. It's permissioned. Permissionless is the XRP ledger, something like that, Bitcoin. Acting as a secure, see, they look at this stuff like this centralized. The more centralized it is, the more secure it is because they have control over it. But you get one bad actor in there, you don't know what's going to happen to this private ledger on the back end. I mean, it might be a new attack vector. We'll see how that works out for them. This permissioned blockchain ledger acting as a secure real-time log of transactions between financial institutions. It records, sequences, and validates transactions while enforcing business rules through smart contracts. This combines messaging and settlement into a single atomic process, reducing reliance on traditional correspondent banking with multi-day delays. Technology partner and base. Swift is collaborating with, guess who? Consensus, an Ethereum-focused blockchain software company. So was the ETHgate, was that to give Ethereum a free pass, or was it to give Swift a free pass, right? Who's behind the Consensus, right? All along. Who knows? But they did get a headway to build out. All those years they had headway from the lawfare mess that was going on the initial conceptual prototype. Okay, so they're saying it is going to be the Ethereum for the initial prototype. And we saw Vitalik say that Ethereum, before it went to proof of stake, the whole chain was a prototype. The Ethereum chain is a prototype. We saw Vitalik say that. It's like it wasn't even built yet. So I guess that is now it's proof of stake, maybe. Reports indicate the ledger leverages Lena, Consensus's Ethereum Layer 2 ZK EVM rollup network. Lena provides scalability, lower fees, but we saw Vitalik say that Layer 2s are dead recently. So what's happening with that? Where's my background music? There it is. I've got it on for those new, I've got it on a noise gate. So when I don't talk, get a little background music, my synth work in the background. So where were we? Yeah. So Ethereum's model. And we saw, Vitalik say layer 2s are dead. But there's a lot of stuff potential happening on Holochain too, guys. I know that it's hard to get Holochain. I think it's on maybe Kraken. There's one US exchange you can get it on. I've been holding that for years because of I predict it's going to be a new peer-to-peer internet, where the data for the apps is going to be decentralized, and they have it's called unit accounting, where they can mirror different blockchains. So mirroring is a huge advancement in scalability for this stuff. When one blockchain can just repeat what another blockchain's doing, it automatically updates it. It runs side by side, especially when one has the private controls as a private layer. You got more options like that. So they are using it as a prototype. So who knows what they're working on now? That's a beginning. Everybody starts out with Ethereum, it seems like. And, they have shareholders. Companies have shareholders to satisfy. So, of course, they're going to need to tell them that they're working on blockchain, something to do with blockchain. And it seems like it's always been Ethereum is that. They've got 0K proofs. Okay, hybrid model with existing systems. The ledger integrates Swift's longstanding ISO messaging standards fully mitigated for cross-border payments. Now, ISO messages can trigger on-chain execution and settlement without disrupting legacy compliance, identity, or risk frameworks. This allows seamless interoperability between traditional rails, private permission chains, blockchain networks, and tokenized systems. Yeah, somebody was saying that ISO isn't really a thing anymore, but yeah, ISO's always been a thing as long as I can remember. There's been ISO standards throughout the world, and they update constantly. You know, they're always updating the ISO standards, and of course they're going to be used in finance. That's the most important way to use an ISO standard. Interoperability features. This design emphasizes connectivity across fragmented digital asset networks. So we're still on Swift here, trying to figure out what they were going to use. Looks like an Ethereum private ledger with smart contracts that emphasize connectivity across fragmented digital asset networks. So fragmented networks all coming together. It supports orchestration of transactions involving multiple chains, fiat systems, and tokenized assets. So yeah, this private, what do they call it? Hyper. Oh yeah, they're using Lena layer 2. They're using all the chains, it looks like. Whatever they need to get what they need done, right? This allows seamless, kind of sounds like Quant a little bit. This allows seamless interoperability between the fiat rails, between private and permissioned blockchains. That's a big deal right there. How these private and permissioned blockchains talk to each other and send money in and out of private to permissioned. You know, yeah, it does look like Quant, doesn't it, Lizard King? They're not going to say that, though. They will never say what it is until it's already done. That's why we're in this space, though, guys, to speculate. Because if everything was laid out for us, the price would already be too high to get in. Right? We're getting in before all the knowledge is out there. You know, that's what speculation is. Interoperability, yeah. Here's chain. Let's see. This emphasizes the connectivity across fragmented digital asset networks. It supports orchestration of transactions involving multiple chains, fiat systems, and tokenized assets. Everything's coming together here. They're pulling out all the stops to compete with RippleNet, it looks like. Prior experiments with Chainlink cross-chain interoperability protocol have shown Swift acting as a central switch or orchestrator for cross-chain transfers. Governance, you got 30 major global governances. But when they get this stuff going, though, you know, banks, they don't have to use Swift, do they? I mean, that's the current preferred method for liquidity transfer, right? They can use what they want. They can use RippleNet to do this instead. It does not eliminate the need for intermediaries, but streamlines and automates processes significantly. See, they've still got their intermediaries, right? When the whole point of blockchain is to get rid of intermediaries. I don't think they can see the future like we do, guys. I don't think they can see how redundant their jobs are, right? They've been in this legacy system their entire lives. Their fathers and their fathers' fathers have told them how to cheat the system, right? How to cheat the poor man, the regular man. And they have no clue, like, from our point of view, what we're looking at as the underdogs, right? All right, we've got Fannie Mae and, was it? Okay, Nick 2.0 mortgage doors in the U.S. have officially opened to digital assets. For the first time, Bitcoin and USDC can serve as collateral to buy a home. And why would you use USDC as collateral? Why wouldn't you just use your fiat? I guess if you want to keep it in that. Depends on where you can keep it, right? You have to keep it on like a reserve Coinbase account or something. Let's see. That can serve as collateral to buy a home. What does it mean for the ecosystem? And for Stronghold, SHX. Let's dive in. Fannie Mae to accept crypto-backed mortgages for the first time. The biggest problem with traditional mortgages is friction, weeks of paperwork, and slow settlements. Institutions need modern rails to connect to the crypto world with traditional banks without breaking compliance rules. Lizard says that and they can contribute like this for decades on they can continue for decades on private ledgers. That's the way they want it, right? They don't want open blockchains to delete their jobs, you know? And that's what we want. I want streamline. I want efficiency, right? I don't want to create a job just to have a job, especially government jobs. All these people think that a government job is a real job. That's a made up job. It doesn't contribute to the actual economy. It's just sucking from the economy, right? Let's see. Not that some of you guys that are doing that have public positions, of course, a lot of this stuff is needed for safety, but a lot of this stuff, like, it just eliminates. It's going to eliminate a lot of jobs, guys, from what I'm seeing. What was the guy from Robinhood, though? He said that some of these jobs are going to explode because of AI. Okay, Nick 2.0 is saying this is where Stronghold comes in. Stronghold Net isn't just for retail payments. It's in the infrastructure designed for total interoperability. If the financial sector accepts digital asset, it needs a bridge that speaks both languages, TradeFi and Web3. Stronghold acts for fuel as for this network. When processing high-value transactions like a mortgage down payment, efficiency and reduced fees are vital. Stronghold enables that flow to be fast, real, and scalable. Additionally, it's ISO compliant for commercial banks and mortgage lenders to process these loans. Financial messaging must be flawless. Stronghold is already there, ready for institutional adoption. All right, Stronghold in the game. I like my Stronghold. Citadel. Smoke Dog is saying that Citadel now has a representative on the board of the DTCC. Remember that Citadel co-led a $500 million investment in Ripple. Everybody's being put into place, aren't they, guys? Citadel Securities co-leads $500 million funding round at Ripple at a $40 billion valuation. This was just this past November. We all know Citadel's right in the middle of everything. All right, where's my bookmarks? Jungle Inc.'s right here saying that, what if stablecoins are more dangerous than CBDCs? Yeah, we saw the senator, I forget his name. It said, be careful about these stablecoins. It's just like Facebook, Twitter, and that had supposedly had backdoors or whatever, and people planted into these positions. We could get a stablecoin that's more dangerous than a CBDC. Let's see what Mark Goodwin says here.
Stablecoins, public databases of blockchains. So they want everybody using stablecoins so that they can surveil everybody warrantlessly.
So there's a lot more you can do on the private side. I consider stablecoins private and CBDCs public, right? Public government is public. But that just means that there's more they can get away with on the private side that the public side can't do. So, of course, they're going to like stablecoins better for that.
These stable coins are kind of considered this victory, this red herring victory over CBDC, central bank digital currencies, because they're issued by a private bank. And so it's like, well, the Fed sucks. So we got these guys who are running this bank out of Ohio, and they're a private company, and they can't possibly be as bad as the Fed, and they're not the government, and CBDCs are bad, so anything that's not a CBDC is good.
Or a state as well, not just a company, maybe a state stable coin. We saw Wyoming's got its own stable coin.
Good. And that is the dialectic that is playing out.
Yeah, he's saying that stable coins are good, CBDC's bad.
But it's bullshit. It is absolutely not true. Stable coins are just as programmable, just as surveillable, just as seizable. All of the issues that we have, that we've been talking about CBDCs, certainly I would say since the COVID era, really the conversation really blew up. All of those dangers still apply to these stable coins, except ironically, there's much less government oversight because they're a private company. So, we've learned.
And don't forget, if the market cap's, what was it, 50 billion? No, I forget the market cap. If it's under a certain market cap, the stable coin, it's going to be regulated by the states anyway.
Learned a lot about YouTube and Facebook and Twitter, right? Like these are technically private companies, but they're way too big to fail and way too big to not have the government have their grimy little fingers all over it. And so they can ban people and demonetize people, take away their ability to earn money or distribute content for wrongthink, even though, government protection of First Amendment speech, right? But they can lean and rely on these private companies to enforce censorship at this level. So that's basically the same partnership that's being born.
So when are the private stablecoin issuers, when are they going to act and seize your money, claw back your money, prevent transactions? Who's in charge of that? Does it have to be like does a judge have to issue an order to do that? It's a private company. I mean, this reminds me of, oh God, what was that movie with Remy? I think his name was Remy. Oh God, I can't. It's one of my favorite movies now. Not Silicon Valley. That's a series. It's a series. Mr. Robot. There you go. God, if you hadn't seen Mr. Robot, check that out. Talk about private crypto money. That's what what was the eCoin? Where you had this big company. Oh my God. There's so much that can happen with a private company taking over the money. It's a little scary, guys.
No one would use Facebook if they knew it was created by the government and they knew it was basically a neo digital ID and a way for you to map out all of your friends and family for the government, right? Like you would never use that. But if they use it through this proxy and this really good story and this fun, it's Zuckerberg and it's this, then no one thinks anything of it. And the stablecoin play is shockingly similar, where the Trump administration is signing executive orders the first week when they're in shop and saying, hey, we're banning CBDCs, like this is so great. And then 2 paragraphs down, they're like, and we're going to use stable coins to enforce dollar hegemon on the world. And it's like, wait, I thought we weren't doing digital. Oh, okay. No, we're doing private sector digital money, but not government issued digital money. But these companies, they back all of their stable coins with billions of dollars of US treasuries of debt. And the only way that they can actually cash those out is if they're, playing buddy with the federal government. Otherwise they get all their assets seized, as we've now seen.
So yeah, what's the relationship between the private company, the private stablecoin issuer, and the government? Yeah. Good question. And what else was I going to say on?
We're doing private sector digital money, but not government issued digital money. But these companies, they back all of their stable. Then no one thinks anything of it. And the stable.
I was going to say something good. I had like 3 things I was going to say. I forgot it. Anyway, let's just keep moving on. Finance Bull says breaking the stablecoin yield text for the Clarity Act is expected to drop this week. XRP holders, the bill that defines everything is to take its next big step. Why you should care? The stablecoin yield fight is one of the things that keeps this bill frozen since January. Yeah, these banks don't want to give it up. Banks versus Coinbase. I don't feel like I've got any representation right there. Do you guys? Banks versus Coinbase. I don't see any representation for me right there. That's just me. Passive yield is actively rewards versus active rewards, activity rewards. Passive yield on the, is this just stablecoin? What about the native asset yields? You know, this is doesn't have anything to do with that. Passive yield versus activity rewards. It's a big difference there. Passive yield is the treasury yields from the issuers being transferred from the treasury to the issuer to you. Because if you didn't know, stablecoin creators, operators, they make a lot of money, guys, and they make it off of the yield for the treasury bond. We give them cash or whatever to buy their stablecoin, and they're buying more treasury bonds with that to make yield. So it's kind of weird. They don't want us to get the pass-through yield, and that means that the issuer keeps all the yield. So they're looking at it like that as well, not just bank yield versus stablecoin yield. They're looking at it like the issuer wants to keep all the yield for themselves and not relay that to the people that are actually funding the business, the customers. This is insane. Two sides pulling in opposite directions while the rest of us waited. Yeah, and they're pulling in a direction that doesn't represent me at all. Lizard said corporate yields are not the same as retail. We are not the same. Yeah, exactly. Senator Tillis and Ashboro reached a deal. The compromise bans passive yield on stablecoin balances. That's the treasury bond flow through. So they're banning that so that these issuers can keep all the money. Think about Tether, the best business model ever. They keep all your money and they go by and they keep all the yield off of your money that's buying these treasury bonds. The compromise bans passive yield on stablecoin balances, but allows activity-based rewards tied to transactions and platform use. So yeah, anything crypto, this is normal. This is what we're used to right here. Activity-based rewards. We're already getting that, right? We're already using these chains to get activity-based rewards. But we're not getting any. We have never, from what I understand, nobody has ever gotten any passive yield off of a stable coin. Am I right about that? Because the passive yield is the treasury bond yield passing through the issuer to whoever buys the stable coin for just holding the stable coin. That's the issuer sharing part of their that's what I was going to say earlier. These stable coins, they still have to be competitive, and that's what's going to make which one's the best. So you do have all of these different issuers that are issuing these stable coins, but they still have to be competitive. So they still have to make their stable coin attractive, because we're only going to buy the one that has the most freedom to it, right? Or has the best backing. But yeah, I'm really disappointed that, I mean, they're not even going to let any yield come out, right? It bans yield. They were talking about even giving us a little bit, but they're not going to give us anything. From the treasury bond. It's all from the on-chain activities. What kind of settlement is that? And a lot of people's talking about Coinbase is keeping 35% of the yield. That's on-chain. That's not even talk about all the treasury bond yield they're getting. And it's basically, I mean, how much are they doing for this yield stuff? How much overhead did they actually have for, besides buying the treasury bonds and keeping all the yield? I don't think a lot of people's looking at it like this. Senator Loomis's team says they're 99% resolved on the yield question. Senate Banking Committee is targeting a markup in April after Easter recess. This matters because if it passes committee, Clarity Act moves to a full Senate vote. Token classification. Don't forget they'll have to send it back to the House too, because they are not adopting the House's Clarity Act. From what I understand, they're still making changes. Developer protections, self-custody, tokenized securities, everything XRP holders have waited for, locked into federal law. If it doesn't pass by May, midterms take over and it could get pushed to 2027. Dang. Text drops this week. April is the markup. The window is narrow, but it's open. Final stablecoin yield text expected as Clarity Act talks continue. Anchorage Chainlink backed hybrid pack. Silly citizens, you don't deserve yield. Stablecoin treasury yield. That needs to go all to the issuer. You don't get none of that. And the banks are going to issue their own stablecoins. That's what they're looking at. They're not even talking about this, guys. They're not talking about the treasury bond pass-through yield. How many times have you even heard anybody say that? Treasury pass-through yield. That's what they should be saying. It's frustrating sometimes. Yeah, we saw Midnight is live. Ripple could become a national bank on, what is that? Thursday is the first, right? No, Wednesday. Huge Ripple could find, this is from Jack the Rippler. Hypey account, but we'd like to check them out anyway. Ripple could finally receive the normal, the approval to become a national trust bank on April 1st, 2026. 2 days away, the XRP ledger could officially enter the Federal Reserve's banking system as the OCC finalizes amendments to affirm the authority of national trust banks to engage in non-fiduciary activities. And see, this is how he's a hypey account. They're not talking about XRP ledger. They're talking about in general. But they did apply for a national trust bank, of course. So he's just piecing the pieces together. But this rule for finalizing amendments to the existing rule on national bank chartering to affirm the authorities of these national banks to engage in non-fiduciary activities. And from Green Candle, U.S. Senators Also Brooks Senator Also Brooks just told a room full of bankers they must compromise and pass Bitcoin market structure. A U.S. Senator is literally telling banks to get out of the way here.
That is going to be really, really important for everyone to remember, is that what we don't want to happen is to have the status quo. It is going to be important, in other words, I think I have to level set that all of us will probably walk away just a little bit unhappy. Okay? Is that what we don't want is to have an unregulated system, to have crypto not regulated at all, and not to have the guardrails.
They all want the guardrails. They're all worried about our safety. Yeah, right. They're worried about protecting that money. Lizard, what's non-fiduciary activity? Yeah, good question. What is that like? Anything that's on chain, maybe something that we do versus something that they do for us?
To allow a situation where we will have deposit flight. And so the compromise that myself...
They're all worried about deposit flight, holding on to those deposits. That's because they're fractionally reserving banking. They're worried about deposit flight because they don't have the money there to give you back for it to fly.
And Senator Tillis have been working on is one that we believe will allow us to have the guardrails in place that will help us to prevent in all the ways we can the deposit flight that we do not want to see happen, and to allow the innovation to grow at the same time. So it is not letting perfect be the enemy of good.
Move it all on chain. That's what I say.
Make sure that we absolutely have to have these protections to prevent the deposit flight, but we're going to probably have to make some compromises in the process.
They're all worried about these crypto firms not following the rules. Well, we're changing the rules. We've got a new system coming. And we just need that clarity to update. Looks like it's going to be second half of April for clarity. And when clarity passes, you're going to see hundreds of millions, probably hundreds of billions of dollars, perhaps even trillions of dollars flowing into Bitcoin and digital assets.
I believe the bill will be passed within the next 60 days. And this is further clarification. The Genius Act gave us clarity on stable coins. This new bill will give us clarity on much more within the general world of crypto. And again,
last thing I want to do is protect the customer. They hide behind that.
And provides the rules that the traditional finance industry, banks, insurance companies, credit card companies, as well as the Fortune 500 generally, need to know that they're able to engage in this marketplace. They know what they're allowed to do, how they're allowed to do it, how they have to disclose it and report it, and pay taxes on it. And this is going to unleash the burdens that have kept everybody out of the marketplace. The result of all this, you're going to see hundreds of millions, probably hundreds of billions of dollars, perhaps even trillions of dollars flowing into Bitcoin and other digital assets. And since all of these coins operate on a supply-demand issue, just like any other asset, we're anticipating this is going to be the beginning of a major source of inflows and price increases over the next several years.
All right. All the money's coming, right? Can't wait, guys. That is bullish right there. Let's go. All right. Thank you guys for tuning in today. Let's keep going. And my synthesizer's rolling in the background while I bring you out today. Thank you guys for tuning into ConnectR stream. All right, we had Lizard King, Angus Grimm, and Bradley B with the 2 bombs. Appreciate that, guys. Thank you. Turple Nurple. And we had, who else is in the chat? Silver Days. Right on. Bradley B went back to work. All right, guys, get it while you can. It is coming. Clarity's coming. We'll see you on the next one, guys. MrConectr out. Peace.
Thank you.